There's nothing here not to like, really. This is a great report. Nice solid beat in the quarter. Very big raise. Like Broadcom, quite often they usually beat, but it's usually by not too much. This is a material beat. Took up the dividend 14%. They're going to be paying out $16.40 a year next year. So it's creeping up on a 3% yield here. I mean, it looks good. $10 billion buyback, as you mentioned. We were expecting some kind of return of the cash, either M&A or buyback if they couldn't find anything to buy. It looks like they couldn't find anything to buy, so they're giving the cash back to shareholders. But in general, like I said, there's really nothing here not to like. This is a great report.
That's interesting, though, your point. I mean, the company obviously has grown not largely, but M&A has always been a really important part of strategy.
It still is.
Have they kind of reached the end here? Is antitrust potentially also a gating issue? What do you think?
No, I don't think so, because remember, they're not buying semi companies anymore. They're buying software companies. Right. And that may have been part of the reason, in my opinion, that they made that shift. But they've been building out their acquisition strategy around rolling up sticky, mission-critical enterprise software businesses. They've been on the hunt. We know that there were some rumors earlier in the year they were looking at some other assets, but they've been telling us all along, our preference is for M&A, and that is the strategy is half the cash flow goes to the dividend, half goes to M&A, assuming they can find something. They can't find something, eventually they give the cash back, and so that's what they're doing this year. By the way, I'm fine either way. I'm a little more partial to M&A, simply because they're really good at it. Like, I like to see them buy stuff, but I'll take a $10 billion buyback too. That's fine.